You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Trading Tech Talk, the program where we break down all the amazing technology that takes your trades from the click of a mouse to the clearinghouse and back again. Each episode will break down the latest developments from the world of trading tech, bring you exclusive conversations with industry thought leaders, answer your pressing technology questions, and much more. If it involves the tech that powers your trading, then you'll find it on Trading Tech Talk. Trading Tech Talk is brought to you by Trade Alert LLC. Trade Alert Tools sets the standard for accurate, timely order overflow analysis for sales and trading professionals worldwide. And now it's time to break down the world of financial technology. It's time for Trading Tech Talk.
All right, everybody. Welcome back to Trading Tech Talk, the program here on the old Options Insider Radio Network, where we break down the sometimes scary and indeed impenetrable world of technology and explain what goes on from the click of that mouse all the way to the clearinghouse and back again. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. Quite a few programs for you guys to check out when you're not waiting for the next episode of Trading Tech Talk. Easy place to do that, of course. The mothership, the flagship, theoptionsinsider.com. You can find us on all of your favorite audio outlets, your iTunes, your TuneIns, your Stitchers, so on and so forth. You can grab our mobile app. A lot of good stuff there as well. And, of course, you can always join us live like we are for this show. Kind of a fun surprise little live show, midweek surprise for you guys, outside of our regular option blocks and our volatility views and our TWIFOs and all the other shows we do live throughout the week. Grab it by that Mixler link. You've seen it. You follow us, a lot of you, in the Mixler platform. If you're following us there now, you should get a notification whenever we go live. So set it and forget it, and you too can join us on the live extravaganzas throughout the week here on the old network. Of course, however you listen, live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do like to hear from you guys. And joining me on the old program today to help me talk some tech, my cohort, my partner in crime in the world of options trading technology, Mr. Matt Amberson, the founder over there at Orats. Matt, welcome back to the program, sir.
Great to be here, Mark. Really looking forward to today. Let's get this going.
Let's get this going. And also helping us hold down the fort here on their Tech Talk today to do a deep dive into some fun stuff is a newcomer to the program, but not indeed to the network. He is Peter Maragos, the CEO over there at Dash Financial. Peter, welcome to the program.
Thanks, Mark. Thanks for having me.
All right. With the gang all assembled, let's dive right on into our CTO interview.
It's time for exclusive conversations with the people who are reshaping the world of trading technology. It's time for a CTO Interview.
All right, welcome to the CTO Interview segment. This is indeed the portion of the program where we welcome on guests from throughout the world of options, trading, and technology and proceed to pick their brains for the benefit of you, the listener. Today's guest is going to be Peter. He's sillily enough agreed to join us for the entire show as we dive into some fun topics in a little bit. But first, let's catch up. Peter, you were on our network last time, I believe, was almost a year ago, back at the OIC conference last year. At the time, things were happening. You guys had pretty much just come in and acquired what was then LiquidPoint and those assets from the Convergex folks. Now, almost a year later, things have been happening in your neck of the woods. Indeed, you guys have acquired LiquidPoint again, I guess you could say, here on the program. So maybe let's start there. What has been going on with you guys? Why did you acquire LiquidPoint again? What has happened since the last time we talked here on the show?
Sure. Well, last year what happened was that my private equity partner, GTCR, they spun out the LiquidPoint assets and combined it with Dash. And obviously that was part of them, essentially divesting of their Convergex stake, which eventually the balance of that business was sold to Cowen Group, and obviously when you do a merger and integration like that, obviously a lot of heavy lifting on the technology side, a lot of projects, and kind of as we towards the end of last year, as we kind of came out the other side of that and started to come up for air, it was time for me to kind of sit down. Okay, now that I've kind of finished my discovery, my integration, and really getting the business together as one group, kind of running and sprinting together for that matter. It's just what's next. Where's the future going to take us? And thinking about 3, 5, 7, 10 years down the road. What's the position? What's the play? That we're looking to set up. And and kind of the thinking among the management team was, we're all young, we have a lot of appetite, and we love what we're doing. I think we have the best team in the business. We have the best technology, and we're really looking to take this business to the next level. So we were looking for, I would say, more of a long-term partner. GTCR, forever grateful to those guys. Fantastic firm. Taught me a lot. Contributed some premium assets that were very complementary to what I've been building really since we went live in 2011, and really private equity firm, been in the Convergex trade for 12 years. There was no pressure to play the hand however you want, and we support you, and but it's definitely not they're not looking for another 7 or 10 years of growth. I mean, private equity firms, they
eventually need an exit at some point. They can't be buy and hold forever out there. So that was the question, of course, is was that pressure from the backers? Was it something? Sounds like something you guys kind of mutually decided there. And you mentioned that this is part of your play. You have you see a lot of long-term future. You want to really double down and invest in this business. So what is that plan you mentioned? What is it really that's exciting you so much about really diving deep into this space right now?
Yeah, I mean, it was definitely my initiative, and and I think that it just underscores not just my excitement for my business, but I think what I'm really excited about is the opportunity for a business like ours in the marketplace, going forward, and not just in the next couple of years. 5, 7, 10, 12 years down the road. Technology is revolutionizing, and disrupting everything that's going on. And the amazing thing, it's making a lot of complicated things much simpler, much more cost effective, and really delivering value to the to the end user. Which is what any technology firm is about. Because it's about technology, and it's about providing the best technology and the best service, around that. So as far as with I would say with the investment banks, really specializing and kind of having a wind of people are outsourcing more and more to specialist providers. A lot of asset classes are becoming maybe mature enough, where there is room for a trading technology provider. So I think there's some emerging asset classes. I think there's plenty of wood to chop in our current options business. I think there's an enormous amount of wood to chop in the equities business. That's a massively growing business for us. And then also it's just kind of the what's next. New asset classes, new geographies, and to really make those long-term investments in the business, you need time. You know what I mean? And kind of, and I definitely didn't want to be I want to be investing in my business, not, and I don't want to be worried about, what my numbers look like, so microscopically, because we're looking to invest for the long term.
You don't want a partner coming to you in like 2 or 3 years and saying, we want to exit now, and, we need to, get something ready for that. You want to be able to maybe plan a little bit longer term than that?
Absolutely. And the most important thing, to do big things, you have to be aligned with your shareholders, and you have to be aligned with your employees and your clients. And I think that, running a firm, the most important thing is maintaining that equilibrium. And as I said, GTCR, a fantastic group of people, and it'll be well within their right to, in 2 or 3 years, Pete, great run. We've been growing, we're continuing to grow, and I'd rather just get in front of that and, also be the buyer myself and increase my stake in the firm. So
it does say something to invest in yourself. I have some experience with that. So it's a fun and terrifying feeling all at the same time. So welcome to the club. But it's interesting. You mentioned kind of investing in the future and the kind of the core focuses. You mentioned a lot of different areas. Is there one area where you guys think you're really going to be doubling down on? Is it going to be the LiquidPoint ATS? Is it going to be some other aspect of the tech realm? Is it something else? Is there some area where you guys are really planning on building that as the bedrock going forward?
I would say, There's no one thing in particular. I think there's a few themes that are really important to us. I would say, continuing our leadership in the visualization space in TCA, helping people measure and visualize what's happening, what's going on inside these routers, what's going on inside these algorithms. How are we measuring? What is the difference? What's the alpha that we're creating in that trading process for that client? So I would say, a big thing is just continuing that. Continuing to invest in our routers, making them multi-asset class, making them multi-geograph, upgrading and updating our ATS technology to provide, I would say, the most creative liquidity solutions for our clients. And so I think it's really it's a lot of minor themes. There's no big boat we're going to build. It's just really continuing on current themes.
I think you mentioned a bunch of different asset classes. I think I'm legally obligated here in the beginning of 2018, Peter, to ask you about crypto. If you come into the studio, I don't ask you about crypto. They take my host license away. But everyone here does seem to be very excited about it. A lot of people pivoting towards that area. Is that one of the asset classes you guys have your eye on in the future? You think it's more of kind of a temporary bubble? I mean, certainly the crypto space is on a bit of a downward trend of late. So is that something you guys have your eye on, or kind of more maybe in the future?
I would say, just like everybody else, it's something that we're looking at. I mean, anytime there's fragmented, well, let's say fungible product, liquid product, fragmented liquidity, that's the exact environment for a smart router. Okay, and obviously that does exist in the crypto space today. I think that we think it's a little bit on the market is in its, I would say, its nascent phase of development. We didn't invent I said everybody's kind of, there's a little bit of a gold rush mentality out there, but I'd like to tell people, we didn't invent the options business. We didn't invent the equity business. Great technology companies that provide solutions, or, you don't need to be, the first in that space. So I think it's something we're looking at its development. We don't have opinions on, prices of assets. I don't know if Bitcoin's worth 100,000 or $1. I couldn't tell you. You know what I mean? That's not something that that's not something that we engage in, because we don't do any proprietary trading or anything like that. What we see as a market that's fragmented, and I think that it's still in its infancy, but it seems to be maturing quickly. And so as far as if there's institutional interest, in it, that's something that, we're not a retail firm. We don't take people's, we don't domicile or custodian people's assets or anything like that. So, if there's going to be multiple market centers, fragmented liquidity, and institutional interest, that's something that could be interesting to us. So it's something that we're watching interestingly from the sidelines. And, when we see the right environment for Dash to go in and be able to provide, a solution that's head and shoulders better and really solve problems for the institutional community, then that's something that that would be interesting to us. We just don't think it's there yet, but it's something that we're watching very closely.
Hey, Peter, it's Matt. I had the pleasure of visiting your offices and taking a look at some of the things. I have a client that's looking for an integration, and I was blown away by the new things that you've accomplished. Your Dash 360. It's extremely visual. This particular client was looking for more out of the money type of options, and with your routers and your ability to direct where the trade and where it's going to rest, it's a very compelling argument that I was able to see with the technology, and of course your David Carrot, his signature is on there. He's a very visual guy, and I was amazed at what you guys have been able to do. Where are you going with all of this? Of course, you have voice brokers. I met someone that was in the portfolio and the basket trading. You seem to have cornered the market on all sides. I mean, is that the plan? It's definitely great for me as a firm that backtests and helps clients try to execute and find the best execution. You could offer voice, you could offer execution, you could offer visualization of where to get maker taker rebates. I mean, is that the goal of all this? I mean, where are you going with this, Peter?
Sure, we'll appreciate that. And David's our Chief Creative Officer, and he's definitely as far as the way that our products look and feel, and everything you see from Dash is definitely attributable to David Carrott's creative bug, and he does a fantastic job. In general, Matt, to hit your question, and appreciate the compliments. We're looking to be in every part of the execution wallet for our clients, sans capital commitment. We're never going to be a capital committing firm. That's not what we're about. We're a financial technology company. We do execution services, trading technology, and regulatory technology, which is, we help people use smart routers and technology to trade intelligently and help them address and interact with, different liquidity sources in a way that's beneficial to them on an order by order, symbol by symbol, trader chart by trader basis. Our trading technology business is about workflow, helping people, whether it's, bring in orders from their wealth management businesses and, see what they want to figure out, what they want to internalize, what they want to access liquidity for, versus, do their risk checks, manage, do position management, et cetera, manage the whole, I would say, the workflow of trading, and then also help people be compliant. So, going back to some of the things you mentioned, whether it's smart routing options or doing trading a portfolio of equity stocks or doing a transition basket, et cetera. It's really using our technology, to democratize these highly sophisticated trading strategies and really flatten out the marketplace for people so they can interact with it in a way that's tailored to them and that's absolutely suitable and the best way for them to interact with liquidity.
Well, I think you've done a great job. I have my bracelet, What Would Peter Do, WWPD, on at all times. So, Mark, I think we can learn a lot from the CEO, Peter.
I like it. I didn't get a bracelet. You can come in with a bracelet here, and I feel underwhelmed here. Not getting the bracelets love. But
I think Matt's created an exclusive on that.
He's
for
more
himself.
of a jewelry guy than I am. Up in New Hampshire, they like their fancy bling in the wilds of New Hampshire. But it's interesting. Good, you have interesting timing coming here this week, Peter, because of course just a week or two ago, we just had Tony Slipa sitting in that exact same chair, and he was talking about what he kind of referred to as kind of getting the band back together in terms of getting a lot of his former LiquidPoint personnel together and trying to, I guess, get back into that space after leaving it for a while. And obviously, you guys currently have a lot of the LiquidPoint assets, a lot of the team over there. I'm curious, what are your thoughts on him kind of getting back into the space? Is that interesting to you? Exciting? Is that what are your thoughts there to have some other players moving into the space?
Sure. I mean, I don't know that I think about it a lot. I mean, the great thing about our markets are, this is America. We're it's competitive. Wherever obviously there's there's a lot of good people, a lot of good technology out there, and obviously this is a very competitive business. So I think it's an attributable. It's great that we live in a country that even in businesses like these, there's low barriers to entry, and people can enter and compete and provide value and find their find their niches and way to provide value. So I think it's great that people are able to compete and. Unfortunately, when you do mergers, there's not always a seat for everyone. So to see, former colleagues that we've let go of, find homes inside the business. I mean, just as a person, that makes me feel good to see that happen. And so that's all good.
Certainly is a robust part of the space with probably room for a lot of players, as you might have alluded. Speaking of room for a lot of segments here on this show, and the real reason you came out, I know you like talking to me, Peter, but the real reason you came in is because we're diving deep into a topic that's kind of in your wheelhouse these days. So let's get into our hot topics in tech.
It's time to break down the latest developments in the world of trading technology. It's time for the Hot Topics in Tech.
All right, welcome to the Hot Topics in Tech. This is indeed the portion of the program where we break down usually the hot breaking stories in the world of technology, but also do a deep dive into some of the interesting topics and issues that are swirling around the world of options and derivatives technology. I can't take all the credit for today's topic. It actually was inspired by a listener question, so let's give him some love. This came from C16. They asked on the last show, can you please do a deep dive into smart routers on a future program? They are the secret sauce of the market these days, but no one really seems to understand how they work. Shedding some light on the otherwise dark world of routing would be a great service. Well, you know what, C16? We agreed with you. So we dragged Peter all the way from New York just to make him come in and talk about this today. Of course, I'm joking, but you were kind enough to join us here today. But Peter, this is appropriate because this is very much in your wheelhouse. I mean, a lot of people out there probably don't realize, they're out there. Maybe they're on the retail side, they're on the professional side. So maybe they click a button to trade on their retail broker, or they click execute on their execution platform, on their trading desk. And they don't think a lot beyond that of what goes on in the ether in terms of, you click that button, it gets out. Something happens between clicking that button and going to the exchange and then going to the clearinghouse. In fact, a lot of things happen. And so I thought we might break that down because a key part of that is the technology that powers that, which is the smart router, which, like I mentioned, is something in your wheelhouse. So maybe let's start there. Let's start very basic, 10,000 foot. What the heck is a smart router, Pete?
What is a smart router? A smart router, well, let's talk about U.S. options. Let me maybe use an example because, a smart router is a technology that really solves a multi-factor optimization equation. So in the U.S. U.S. options landscape, okay, you have 15 exchanges, okay, and within those exchanges you have different mechanisms and also different order types, okay, and different fee schedules, okay. So you have, let's say, you have liquidity, which is the explicit price, okay, and then you have how exchange fees modify that, right? So obviously, if there was a rebate, that would reduce the price that's shown on the screen. If there's a debit, it would increase the price to the end user, and that's how you create the net price. So what smart routers do is really flatten all that out, okay, to use some instructions, and they can basically, it's a technology that can interact with all of those 15 markets in the right order, okay, with the right pricing mechanism, and really give that customer, I would say, liquidity at the price they're looking for, that's appropriate on an order-by-order basis. And that's kind of the smart part. The router part is just routing to the 15 exchanges. The smart part is doing it where it achieves the client's goal on that order. Sometimes that order, like let's say if something's a penny wide and it's not moving, the right, like for instance, the right strategy is just, post on the bid, and you're probably gonna get hit and get a rebate, and so you're gonna have the best net price on that. Let's say something's about to move heavily; it's a very thin stock, like a high price stock like Amazon. And it's flipping around. There, you'd want to, let's say, post on an inverted exchange where you'd want to be hit first before the price moves because let's say you're liquidity sensitive and cost insensitive. And that's kind of, if you build two axes, liquidity sensitive and cost sensitive, a smart router is giving that person the right equilibrium based on their order, based on that symbol, based on the time of day, and based on the goal of the trader, and how it's really slicing those orders into the marketplace. So, and it really makes it so a user doesn't need to understand all the 15 market structures of all the different exchanges. And then there's different pricing schedules. Then they don't need to. They don't need to understand any of that. They just need to, with kind of a short consultation with our trading desk, we get it kind of, let's say our smart router's a semi-bespoke suit off the rack, and then, with answering a few questions and a little consultation, you can get the cuff right, get the right lapel, get the right fit, so it fits them like a glove on, once again, a symbol by symbol, trader by trader basis to really help them interact, with the liquidity in the marketplace in the most intelligent way possible.
Well, I'm glad you brought that up because, that was going to be my next question, which is, obviously what makes a router smart for one person or one firm could be a completely different set of criteria for another person or another firm. Your basic retail guy sees the NBBO, he wants to hit the bid. He doesn't care if it's price time priority. He doesn't care if it's a make or taker or all the other, what the PFOF is. He doesn't care about any of that. He wants to hit a bid and be done. Maybe your institutional guy on a desk, maybe you're right. He wants to get paid to make liquidity, and he wants to minimize his fees for taking liquidity. He wants to take advantage of all these other things that are going on, so he has to customize his a little bit differently. So it sounds like you guys put a lot of effort into really tailoring these routers to individual clients.
Absolutely, and I think that there's also it's worth noting that you kind of have to bifurcate it because there's really there's two market structures within these, where you have the institutional customer that's more cost plus, which means they want to pay the exchange fees and collect the pay the debits, collect the credits, and really pay an explicit cost. So we're almost like a consulting firm for them, where, and they're getting the benefit of the market structure themselves. On the retail side is much different, because the retail side, it's everything goes to consolidators. Okay, where there's people like fair disclosure, we have we have an affiliation with IMC, but there's Citadel and Susquehanna and others in that space, and it's much different. I mean, the retail investor, those market makers are competing on execution quality. So there, it's how do they, and all the retail brokers, they're using the consolidators to get people price improvement on top of the NBBO. So the retail, but the institutions are sort of trading, at the NBBO. Because those are, obviously the consolidators, they don't trade with institutions. They're looking to trade with the retail community. The retail community is even doing better than the NBBO. And those consolidators are kind of, I would say, competing very aggressively on how much execution quality they can deliver to that customer. So not only is that retail investor getting a super cost-effective, execution from the retail, whether they're paying $4.95 or however many dollars it is a trade, but on top of that, those consolidators are judged based on the execution quality, how they're going above and beyond the NBBO, to deliver value to that retail investor that's trading in smaller lots. So I think that so that's where the value is coming from in each. On the institutional side, that smart, our SORs, our smart routers are really, helping people work within those 15 exchanges, and then within sort of the dark pools within those exchanges, because there's a lot of liquidity that's not shown. It's kind of let's say there's about 1 million options kind of quoted out there. Probably 10% of those have open interest. Okay, and then let's say the top 15 underlyings really represent about 50% of the volume. So if you can imagine market makers trading, quoting 1 million instruments, once they, but inside the exchanges, there's where you can start an auction. Okay, and then people can step up now that they know what symbol you want to trade. Like back in the day when I started my career on the CBOE, we had there wasn't 1 million options back then. We traded a few,
IBM, SPX, and OEX, and that was kind of it, right?
Yeah, but when people came into the crowd and say, "How are these? How are the IBM par calls?" Now all of a sudden, instead of all these quotes that are out there with no interest, right, just really, as the underlying's moving, those models are changing and the quotes are updating. Now you have market makers, and every time, and it's the same thing electronically today as it was back then on the exchange floor. Once, how are the IBM pars? Then all of a sudden, not only does the market get tighter, but it gets deeper. So there's more liquidity in a tighter spread, just because it's not one of 1 million things that people can hit you on. So there's a lot of functionality within these exchanges, not just the quoted markets for the institutional investor. And a smart router needs to, for the institutional investor, optimize both those the bids and offers that are posted, but also optimize for the customer to pull more liquidity, out of those matching engines that's really hidden behind there. Waiting to be tapped into.
Matt, this is obviously a very fluid, very dynamic, somewhat controversial area of the space, because there's a lot of different moving parts, as Peter just alluded to, when it comes to configuring these smart routers. What do you have for Peter here?
Yeah, like I said, I was in the offices, and the normally soft-spoken David Cross was almost foaming at the mouth, so excited to show me what he has. What I think Dash has done is also made it visual, so you could see what's happening in the smart order routing, and it helps you actually make decisions about how you want to treat an option and how you want to interface with the smart order router. Peter, is that a fair statement? That I watched trades in your analytics tool, and you could see the trade going out to the market. You could see, how it was treated at the SIBO. It's almost like there's an intelligence even after the router starts, because it goes and it looks and it goes to a certain exchange. It comes back, it goes again, it comes back, goes again. And the visualization tools really make it cool. Are your clients using the visualization tools to work with the types of orders that they're sending, and how important is that visualization tool, Peter?
I would say it's super important, for a few reasons. I would say the biggest reason, is that kind of, for the most part, traditionally smart routers, you send an order and you get fills back. You don't know what happened, why it happened, when it happened, what was the market before and after each wave that you're aggressing the marketplace. And really, this business, both, on the institutional side is filled with very, brilliant people, men and women that are trading, millions and billions and sometimes billions of dollars. Then on the retail side, these communities that have been developed of retail investors that they've never been more sophisticated. They understand what a good fill is. They understand, how things have changed over the years. And, so I think that and the benefit of visualization is now you've taken something where people are spending, there's millions of dollars flying back and forth with these smart routers and people aggressing the markets. And now it's a way to, people tend to be in this business very visual. Okay, and it's one thing to sit there and say, well, it's going to do this, and then it did that, and, sending people spreadsheets. It's another thing to show somebody a movie, an animation of what happened. It's almost like you go out and play a pickup soccer game, then you go home and you load it into FIFA 2018, and the computer shows you kind of what you guys did, and that way it taps into a whole different part of the brain where they can and kind of when we developed the technology originally, we just wanted people to see it the way that we see it in our heads. Because, beauty is in the eye of the beholder. People can look at the same spreadsheet and surmise different things, totally different things. We wanted to see people to see exactly, okay, what was going on in our router from our perspective, okay, and democratize information. Okay, which means that every strategy step, every child order, we want them to see whether we missed, where we hit, what was happening at the exchanges, how long it took us to get to the exchange, how long it took the exchange inside their matching engine to respond to us, and every single order. That way, you can audit us in real time, and that builds trust, it builds confidence. Okay, and it gives people a much different experience than what else is out there. The thing that we kind of fell into by accident that we didn't realize is we were just doing that to be different because we thought it was cool. And instead of explaining it to people, we wanted just to show people animations and these little movies of what's going on. And what we discovered and what we fell into is that once you visualize it for people, wow. Now they understand it, and they can say, you know what? In this symbol at this time, I want you guys to do this. So it created a feedback loop where now we can, going back to kind of like tailoring that suit, offering controls so people can really, configure it to their liking. And then, because once they see what you're doing, they can then understand it and give you feedback. Okay, and then you're building an experience for that client where they know this thing is configured and optimized, okay, the way that I want it, based on, my stocks, my traders, and a whole different bunch of parameters. So I think it's, for us, it's been one of the most powerful parts of our technology, to unleash that to people. And it sells the product. When people can see that, when you can walk into somebody's office with an iPad and say, okay, let's go through some orders in some different scenarios and actually show them what it does rather than talking about it, just show them, it speaks for itself.
And that works with the multi-asset suite, the algos that you have. I'm familiar with Volt. It's your implied volatility algo, but and I remember Smoke. And does that visualization work with the algos, and is that how to really control the algos, Peter?
Absolutely, it works with everything. Every product that we support can be visualized using that technology.
Maybe
that sounds good.
We have to borrow one of those visualizations and throw it on here with this show so listeners can see some of the orders being routed and what it looks like. Because you're right, a picture sometimes is worth 1,000 words here when we're breaking down something as sometimes arcane and obtuse as a smart router. But you mentioned there's a lot of different moving parts in that smart router calculation. One of the big parts these days is, of course, that auction, because you see the NBBO, and of course you hit the button, you want to trade it, it gets routed to that, and then of course there's that little competitive process, and it varies depending on exchange. They hold up the order for X number of milliseconds while people come in to compete for a little bit of price improvement. That's a relatively recent addition to the option space. In the last 5 to 10 years, we've really seen every exchange kind of embrace that technology. How much has that complicated your job, where you effectively have different auction mechanisms on each of these different exchanges out there, and having to take all those different delays and mechanisms into account when you're building and tailoring your smart routers for your clients?
Well, I mean, yeah, listen, it adds complexity, but it also adds opportunity, I think is the highlight. When we started Dash, there was only 7 exchanges and there was no auctions, and there were problems to solve and complexity. So now there's 15 exchanges, there's auction mechanisms, and really there's a kind of a bifurcated market between retail and institutional orders. So it's gotten more complicated, but with that, it's more opportunity as well, because as long as you're using the best technology to interact with all of these mechanisms, there is a ton of liquidity out there. Even though sometimes when people look at the screens, the market quality is not apparent to people. It's just not, especially when you go away from the top 15 names, it doesn't look like it, but there's much more liquidity out there, and you need to use the best technology to interact with that. And I think that, we've built a business out of doing just that for our clients.
It seems like that topic, maybe as a little quick aside here, that whenever I bring up auctions, it seems to be a very controversial topic for a lot of people. There seems to be very much almost a religious schism. Some people really think they're the best thing since sliced bread. They've really improved execution for a lot of clients and customers out there. Others think that these false delays and everything else are kind of going to be the death knell. They've fragmented liquidity. I mean, you already have 15 different venues, and you have all these different mechanisms all fragmenting liquidity even more, and different delays and things that people aren't showing their best hand when they're making markets as a result. I'm curious, where do you fall on the topic of auctions in general?
The issues that auctions have created is that it's created wider markets, okay? Because especially the retail investors, the consolidators, are, those orders for the most part, the marketable orders are coming down in auctions where they're starting the auction themselves, so they're protected on at least 40% of the order. They're guaranteeing the customer they will execute the whole order at that price. So it's really, the exchanges create a kind of competitive process for people to either step up and participate, or even step up, and even better for the client, improve, on that price. And I think that there's definitely an argument to say, okay, if people are guaranteeing that execution, that they should benefit from that and be protected, and but also the customer, it should be exposed to other market makers and get price improvements. So those are all good arguments. But I would say the downside has been that, given that that's the way that the retail market, the retail marketable orders are hitting the marketplace, the quotes have widened. Okay, because because I would say some of the market makers, they're afraid to get picked off, or with people's Twitter feeds and little bots, and as I said, there's a million contracts being quoted across 15 markets, and the number of market makers has been reduced, so it's harder and harder for these guys. And I think that what's happened is some of these quotes now are really defensive quotes. It's not where they're willing to trade. You know what I mean? Based on their model, it's really where they it's like almost like it's the defensive quote. I can't come up with the right words maybe right now, but it's their quote of last resort. I think it's sometimes this is where I'm willing to trade, and I don't know who it is, but I assume it's somebody that has better information than me, rather than somebody kind of making a wholesome type market. So I think that but I think what's happened is, I think it's benefited the retail investor, who I think is, the experience that they're getting as far as execution quality goes, is incredible. I don't think retail's ever had it better, but I think it's made it harder for the institutional investor that doesn't have access to that consolidator market. So it's led to wider markets that so they need I would say they need people like us and others to help them really interact with those markets, because they're really, those quotes are more defensive.
Yeah, I think that's interesting, Peter, that you're saying that there really is a lot more liquidity there, but they can't really show their hands because there's a lot of pickoff paper. I mean, do you study that? How do you get that out? How do you communicate that to your clients? It'd be great to know. I mean, we've done studies on the market and how much it's changed just over the last 3 or 4 years on the size and the bid and offer has gone down. The markets have widened out, and not just widened out, but and especially on a day like February 5th, where there was a lot of volatility in the market. Wow, the markets widened out just extremely wide, and the size went down quite a bit. Are you guys monitoring that for your clients, and how is that part of the visualization tool as well, Peter?
Absolutely. I mean, we're monitoring all that and visualizing. I mean, on the visualization side, we're showing people, before and after every step, okay, how the market is changing. So they can see, okay, when they touch this quote, what happens after. So they can see the cause and effect of what's going on and what's happened to the spread. And a lot of these, when markets are wider, especially let's say in the non-top 15 names or even in the top 15 names in the outer months that are, that have less liquidity, this is where we're able to shine and, helping the customer pick the right algorithm, whether it's smoke or everything else to kind of, smoke out the liquidity. And, as you'll see, when you start to interact with some of these markets, they do get tighter and deeper, where, they're not so we're able to show people how we use, I would say, very elegant, sophisticated techniques to make that spread a little tighter and get them a better fill versus, let's say, the arrival NBBO.
Nice.
Yeah, it's interesting how much breaks down these smart routers. So we kind of have it broken down into kind of two components right now. Here we have the proverbial retail order who executes through your retail broker. That broker then turns around, usually through some existing agreement, and sells it to an aggregator, a consolidator, call it what you will. These firms like Citadels and others, these market makers, who pay for orders. They pay for order flow. The thought process there, of course, this is an old process going back many years since both you and I were on the floor, where they don't want to call it dumb flow, but shall we say it's uninformed flow. It's flow that's just coming in, and it's good flow to be on the other side of. It's worth it. There's value there, so they will pay to execute that. And of course, you mentioned they have their different execution venues at different exchanges. Well, they'll keep 40% of it and put up the rest, and that's kind of what goes on the retail side. And of course, they go into those auctions, like we mentioned before, hoping to get a little bit of price improvement for the client. Then on the institutional side, you have, the Baskin-Robbins 57 flavors of smart routers, where some of them want to prioritize rebates, some want to minimize maybe fees for taking liquidity. They want you mentioned some other ones. We're talking about, getting into the movement of the underlying and how much they can lean on it. I mean, how intricate would you say some of these smart routers? Obviously, you've built a lot of them. What would you say is the typical need, the typical use case of a client versus maybe an example of something that was really surprising or just intricate in terms of how deep they get? Are they looking to scan the book and see which way how much they can lean on orders going a certain direction? I mean, how deep do these layers of the onion in the smart router go?
Sure. I guess before I hop to there, I just want to make some things. It's something I totally disagree with, and it does us all disservice. This whole retail dumb flow it's a ridiculous concept. Okay, the retail investors.
It's not my word. I'm just passing it along.
I hear you. I just want to make sure that we don't gloss over that.
Peter says retail flow is dumb flow. That's the takeaway from this.
No, that's not. It's the opposite.
Financial
it's
for all
the
your
opposite. It's the opposite. But let me just talk about that for 1 second, because I think that I think it's a big misnomer. I think the biggest difference is size. Okay, and that's the one thing that people, obviously, if somebody's, a consolidator doesn't want to get picked off. Okay, let's say the market is, a few cents wide. A retail order is typically, I don't know. I mean, it's, I don't know. Let's say anywhere between 8 and 12 contracts. Okay, institutional size is hundreds to thousands. Okay, so when that institution is going to take the bid, okay, they're not. So when the retail order comes in, let's say it's just a 10 lot. Okay, that's it. That's the whole order. Okay, there's not 10,000 behind it. Okay, that they're gonna keep chipping away and run the person over.
Unless they're really sneaky.
Exactly. Yeah, but that's not the retail investor. You know what I mean? They're trading 10 lots. You know what I mean? And some other things. So obviously, the market maker could be much more aggressive because they know they're seeing the whole parent order. Okay, and B, it's not, if they're on the offer. Okay, let's just say there's no EQ. If they're on the offer's not about to become the bid. Okay, which means that because when that happens, they've automatically essentially almost locked in. Well, they've locked in a theoretical loss. They've now sold the bid. So to speak. So it's not about. So and that's why the consolidator model exists for retail, because it's smaller size and they're seeing the whole parent order. On the institutional side, they're never going to show no market maker would ever see the whole parent order. So, you have these very sophisticated algorithms that are chipping away at markets, posting and taking at the same time, putting stuff mid-market, taking it out, moving things around exchanges where you don't know you're trading against professionals. You know what I mean? And you don't see the whole order, and most likely there's more behind it. Okay, so it's just a much different market structure. You know what I mean? In that way, because in the consolidator model, because it's smaller lot, okay, informed but smaller, okay, lot, okay, they could be much more aggressive with their pricing because they know they're not going to get run over. On the other side, they just don't know. It's impossible. It's impossible to know when the order's starting and when it's finishing because it's being, there's 15 sandboxes out there and people are pushing their sand, and obviously they're using a lot of sophisticated tools, provided by people like us to make sure that people don't know what they're doing until they're done and it hits the tape. And they never know when it's really done because some orders are done over days or hours or, et cetera. So there's just much different market, and the retail investor, I think they're more informed than ever. You know what I mean? So I definitely want to, give them kudos for that. And, what the retail brokers are doing, I mean, they've democratized trading technology where you see some of these scanners on, the retail brokers' websites. I mean, there's some really sophisticated tools out there for people to use that just didn't exist 10 years ago. So there's been a lot of innovation and there's been a lot of democratization of, really smart options technology and analytics and scanners, et cetera. So I think that the retail, investors never had it better on that regard. I think maybe I hit a little bit. On the institutional side, it's basically it's everything and all of the above. You know what I mean? It's especially with bigger orders, and you have institutions, like pension funds that are, they have teachers and firefighters, and but they have size. I mean, when you have billions and billions of dollars to deploy, you're going to have a bigger size, and helping people get that done, especially in an environment that we have today, is very hard, and you have to use every trick in the book, and every tool available, and keep on developing your tools and keep on sharpening your knives, so to speak, to make sure as the liquidity landscape changes, as the exchanges add new order types or new mechanisms, that you can really help people optimize those.
Well, that brings up a good point. How often are you sharpening those knives? How often are you tweaking these algorithms? Some of these variables that go into them could change intraday or very least day to day. I mean, things like exchange fees, for example. That's a very competitive marketplace, and they're always looking what the other exchanges are doing, and they're tweaking their schedules just to edge out the other guy. So how often are you guys really updating these? Is it intraday for your clients? How on it are you guys throughout the day and throughout the weeks? Are you constantly tweaking and sending those updates out to your clients?
Sure. I mean, I think you got to group those into two different buckets. Number one, when exchange fees change typically once a month, they typically wait till the last minute of the last business hour of the last day of the month to send them out, so their competitors don't get a chance to respond to them. So yes, obviously that's something that we can change in our system real time. But in reality, it's done on the night of the last business day of the month. Okay, those changes are done to the system. As far as on the algo side, I would say there's two things. As far as allowing people to configure and control what they're doing, those are things that we're doing intraday for customers. Okay, when they could say, okay, in Tesla, change my routing table, and I want to post on these 3 exchanges, et cetera. That's something that through our technology can be done, in seconds. So helping people, change their configurations, really get, control the algorithms in a way that suits them. That's something that we can do in real time. As far as our upgrading, I mean, we're kind of, we've spent a lot of time on, our technology where, we're doing software updates, every week of the year. And that's something that we're very adaptive, and we've built a lot of technology to segment things and work things in over time. But yeah, I mean, it's really our strategy and our philosophy is to be as agile as possible and be really, really adaptive, and to be able to roll out new software and changes as fast as possible.
I want to get back to it really quickly because we got into that whole retail discussion there for a little bit. But I'm kind of curious. Obviously, nothing personally identifiable here or anything. But give us an example, maybe a couple of interesting examples if you have them off the top of your head, of maybe some interesting, just esoteric requests you guys have had to feel in terms of something interesting component to a smart router, something that you never really perhaps considered that kind of maybe changed the game for how you went going forward. Easy question.
Oh. Well, I don't. I'd rather not answer it because I'd rather not violate the confidence of my clients.
They don't call it the hot seat. It's just me and you here, Peter. There's no one else. Matt, I dropped Matt off. He's not listening anymore. There's no one else listening to this show. It's just me and you. just talking, just two guys talking.
No, I appreciate it. But no, I mean, there's a reason it's called secret sauce, and it needs to stay secret. The one thing I can say is that our customers are, some of the most creative, intelligent people in the world, and we help them whatever they can imagine. We can help them prove it, disprove it, model it and deliver software, in an expeditious fashion to help them, optimize that. But a lot of it, what we do at a generic basis is helping institutional customers deal with, I would say, liquidity challenges, and helping them, optimize our strategies to really harness, get the right price out of the marketplace, so they can trade more and effectively and quicker.
Speaking of liquidity challenges, one area where we see persistent issues with liquidity, and it seems to also be an area where the smart routers and just the options routing and the options exchanges in general tends to fall apart a little bit, is when it gets to spreads, particularly in a multi-leg complex spread orders. We've done a great job, as you mentioned, in the options industry of kind of building up this retail audience that has grown to become very sophisticated. A lot of them have become institutional traders now, or professionals have come to experience as well. They're used to expecting a certain degree of functionality. They hit a bid, they expect to be able to get X number of amount of size doing that. Now all of a sudden they're starting to do multi-leg spread orders, and they're coming into complications because there's these legions of spread books at different exchanges. They're all very siloed and compartmentalized. Very often they don't talk to each other. You could have one leg of a spread lining up on one spread book, one leg of a spread lining up another spread book. Your order got routed to a third spread book because of the smart routing relationships you talked about earlier. And so you're resting out there in the ether, nowhere related to those other two orders. And it's kind of up to whatever, your execution platform, your broker, your exchange, whether they even match that up. So this is still a persistent problem area for the options market. What can we do? I know you guys are probably working on this on a regular basis over there. You're probably hearing this from your clients on a daily basis. What can we do with smart routing tech and some other upgrades maybe to help facilitate this lingering spread execution problem here in the options space?
Well, I mean, I think that I think we've already built. I mean, I can speak for our customers. And what we do is, we help people optimize that. There's liquidity in all of these books, and I think that the key thing is you can't choose one. When obviously some of the volume is concentrated, in one or two books, but I think that you need to use smart routing technology. You need to be participating in all of them, and when you find liquidity, it's almost like you're on a boat, and let's say there's 4 cobs, you need to throw 4 rods in the water. And then, you know what I mean? And then when you find the area where there's fish, you need to redirect the other rods into where those fish are and catch them all. So I think that's exactly a smart routing situation.
It's funny because I bring this up a lot with different people, and I get a lot of different answers about what the solution is. I think I can probably guess which way you're leaning. But, at the end of the day, do you think this is, like you mentioned, you think you solved this for your clients? So you think you've overcome this and it is surmountable, this issue, via technology? Or do you think we need maybe some sort of, I hate to say it, but regulatory change to make these spread books maybe a little bit more open and willing to talk with each other? Because we know at the end of the day, these exchanges, the last thing they want to do is route anything away, right? To get it. So how do we overcome that issue?
Yeah, I mean, I think that's the role of the agency execution broker, to do that. I mean, I think that I don't think it's the role of the regulators or the exchanges to solve these problems. We have a market, we have a competitive market where, yes, some people say it's a competitive market. Other people say, oh, it's fragmentation. Yeah, there's different market models. There's people, just like I said, it's a free country, and and this is a really competitive market. And I think that market solutions, are the right way to go here. As far as we don't need regulators to solve these problems. Our problem is we have liquidity in multiple places, and that's the role of the agency execution broker to help people do that, not the exchange. The exchanges, they should focus on their matching engines, on what they're doing and providing the best marketplaces and liquidity pools they can. The role of the broker, is to help people interact with those, on the equity side, exchanges and dark pools, and the option side, everything's within the exchanges. I mean, that's the role of the executing broker and the trading technology provider like us and others to provide those services. So, I think that's the those are the solutions. Like, for instance, I think that I wrote a piece recently on the rebate pilot, the access fee pilot, and my whole thing was we have market solutions for this. It's called cost plus. Okay, you know what I mean? We're trying, you know, like we don't need to ban rebates to eliminate conflicts of interest. Okay, that's ridiculous. You know, what you do is, you know, it's done with transparency. Okay, yes, because let's put it this way. If I'm somebody's broker, okay, and they're sending me an order and I'm just routing where I'm going to get rebates and I'm not getting the best price, you know what? They're going to stop using me. Okay, that's what's going to happen. That's what happens in America, you know, in a free market economy, right? So the whole thing is we have to protect people. We don't need the government to do that. You know, institutions can just benefit from those rebates. They can benefit from that market structure. We don't need to change the rules of the game, you know, to eliminate conflicts of interest. You need transparency. You need, you know, disclosure of routing practices, what the market data was before and after. You know, when you deliver, especially, you know, these people are spending a lot of money. Like, it's unreasonable for a broker, whether the government mandates it or not. Like, we're providing transparency real time. That's what the customer should demand, and I think they all are. You know, we don't need to change the market structure to ban rebates. You know, with the cost plus model, the customer can benefit from that. And even if it's not a cost plus model, let's say it's the traditional all-in model, you know, by doing order routing disclosure, transparency about what the market data was, you know, before and after every wave, and really show, you know, having the customer, you know, see what the person did in the order that they did it in and why they did it in. You know, these things are free. You know what I mean? They can be done today. We don't need to change the marketplace for this.
I think that's the key, obviously. If we can get transparency on that, is sunlight is the best disinfectant, as they say, right? So transparency on those types of issues, I think, would stamp out a lot of those conflicts. We're a long way from the days of brokers getting paid more to route something for, you know, and there was no linkage and, you know, trade throughs everywhere. We've come a long way since that. You know, speaking of coming a long way, we've come a long way on this show. We're almost out of time. So we can probably go another couple hours just on this topic alone. But that said, is there any area you think we didn't touch on when it comes to smart routers, or perhaps any lingering last-minute thoughts you want to leave our listeners with on this topic? Have at it.
No, I mean, I think that was a pretty comprehensive discussion. You know, I think we. Let's
start over. What is a smart router?
No, I think the biggest thing is, I think, you know, technology has never been better, and I think it's going to continue to improve. And those smart routers are just getting smarter by the day. I think the customers are getting more sophisticated. I think they're getting, you know, ever more demanding. And, you know, there's our markets aren't perfect, but, you know, I think we have, we have some of the best technology in the world and some of the best technologists solving these problems. And I think that, you know, if you look at the U.S. markets versus, you know, any other, I would say any other market out there, you know, there is not, we talk here, and even I say it, you know, there's, so at times we don't have good market quality, but that's a relative statement. Okay, that's because, you know what I mean? That's just because, you know, let's say bids and offers got a little wider, and, you know, and things are concentrated among 15 issues. But if you look at our market quality and our market structure versus anywhere else in the world, ours is far superior. You know, we have the most deepest liquid listed markets on the planet here, and I think that, you know, sometimes we lose sight of that. And I think the retail customers has never had it better. I think the institutional, you know, customer has, you know, rock solid technology providers like us and ORATs and others, you know, helping them make better decisions and get alpha out of the trading process. So, you know, overall, you know, I think that there's a lot of great things happening.
That's going to do it for a deep dive into smart router. C16, I hope that answered your question. It was a long way around to answer your question. Speaking of answering your questions, I like to always squeeze at least a couple in. So let's see, we got a couple more minutes. Let's see if we can squeeze in a few more in our inbox segment.
It's time for you to take your place on the Trading Tech Talk panel. It's time to open the inbox.
All right, everybody, welcome to the inbox. We got a ton of questions. Unfortunately, only time for one or two. Let's see how many we can get on. Here's actually a good one for you, Peter. It's actually good, fortunate timing that you were on the show today. This not just because the smart router question. We got all kinds of questions up your alley here today here on the show. This is Nickel. Nickel T says, "Hey, Options Insider." Well, hello, Nickel T. He says, "I love the network, particularly the Tech Talk." Well, you wrote into the right show. Then we need more episodes. We're trying to get more episodes out to you, so stay with us here. He goes on to write, on an upcoming show, do you guys think you could talk about why dark pools don't exist in the options market? Is it a tech limitation or something else? Well, I happen to be standing right next to one of the guys who runs pretty much the only, it's not really a dark pool, but it's the closest thing we got, right, in the option space in terms of the LiquidPoint ATS, I suppose you could call it. What do you have to say here for our friend Nickel T? Why don't we have dark pools in the options world, Peter?
Sure, I think it's a market structure issue. You know, we run at Dash, we run an ATS, which really, provides like a request for a quote mechanism for people to enhance the liquidity that's on the screen. Without using the exchange mechanisms. But the real reason there's no dark pool is it's a market structure issue. On the equity side, they exist because there's something called the tape reporting facility, where within the NBBO, two broker dealers can get together and just agree to a transaction, and then it goes straight to the tape or the consolidated tape. Okay. On the option side, that's not permitted. Okay. Every trade has to happen through an exchange matching engine. So all the trading is at some point, like even our ATS, we need to then expose it to another. We need to double auction it. We need to do it within our system and then on the exchange for further price improvement. But the 15 exchange medallions are the only ones allowed to print to the tape in options. Where on the equity side, any ATS operator can print to the to numerous TRFs. So it's really a market structure issue, and that's something that the SEC has decided is appropriate for equities, but it's not appropriate for options.
Yes, we have that nice,
in their opinion,
a nice exchange execution requirement here in the option space. Yeah, you're right. Some people have different views on that. I'm sure you probably have a different one here as well. We'll save you from getting into that hot water right now. But yeah, it is an interesting one nonetheless. So we got time for, one more quick one. As you might imagine, we get overwhelmed with questions about crypto and blockchain. We try to limit them to only one a show. Here, let's finish off on this one. This comes from La La Lad. I like that name. He asks, or perhaps she, he says lad, probably he. Does blockchain have any practical use on the trading front, or is it all just back office stuff? That's a good question. We do hear most of the interest, it seems like, in the trading world seems to be the back office clearing stuff. But I don't know, do you think it's got any use in the front office kind of execution side as well?
Not that I can see at the moment, no, I would say. I mean, obviously, I'm still learning as well, and, I'm not a finished
You're
product.
breaking hearts out there, Peter, left and right now. I can see all the crypto maniacs, the blockchain guys writing in very angrily.
No, well, I'm not for or against blockchain. I think that, putting crypto aside, I mean, I think, blockchain is is a great technology innovation where, it's going to democratize transactions, and I think that, let's put aside maybe trading tech for a sec. I mean, how many, just in our global banking system, how many toll takers there are? You know what I mean? For me to send my cousin in Greece, money, I mean, I think probably 3 people are going to make money along the way. And all I'm doing is, sending my money to a relative. I mean, if you think about it, in this country, we go to an ATM machine and we actually pay somebody to give us our money. Okay, you go to, let's say MoneyGram and all these, people sending money to third world countries. I mean, they're paying, hundreds of basis points just for somebody to take their money and give it to somebody else. So the whole blockchain, and this is maybe putting a trading tech aside for sure. It's going to democratize. Me and you can face off against each other in a safe and secure way. And and I think the power of what that means to the global economy is truly disruptive. Where you have all of these, essentially these private database. Right now, we basically have a bunch of private ledgers out there. Every bank has their ledger. The customer has its own ledger that they reconcile against the bank, et cetera, et cetera. So now using this new technology to democratize all that, and you can have your own private mining communities. I mean, what the technology allows is it's almost like a database in the cloud, and with where people can face off against each other in a trusted environment and know who they're transferring value to. So and obviously that has big implications in the clearing process. I mean, it still takes us days in this country to clear trades, which is crazy if you think about it. We already know at the time of trade who the broker is, who the customer is. Everything is known. And it still takes us a couple days. So as far as maybe not in the trading process, I mean, I think that because I think we're pretty sophisticated in how to do that, and we're really not that's not where the value transfer happens. It happens really post-trade, and I don't see that converging anytime soon. But what blockchain means for technology innovation and for this world, I think, is profound, and we're just scratching the surface.
I can tell the way your eyes lit up when I mentioned that question, Peter, that you're clearly a believer when it comes to the blockchain. Someone else who's a believer on blockchain and indeed all things crypto is Matt. Matt, are you any thoughts here for our listener here, Mr. La Lad, about blockchain? Does it have any function on the front office, or is it in the front end, or is it all kind of back office stuff?
Well, I think it'll start in the back office. I was at a conference out in California, and they're already talking about it, and they're already talking about ways to implement it. I think it's going to take a while, but eventually it will help out trading, and it will help out even smaller businesses in getting capital to smaller businesses where you don't have to go through all of the hoops on Wall Street. So I think it's going to be a revolutionary technology. It's going to take a while, just like any disruptive technology, Mark.
Speaking of things that are disruptive, the end of the show also can be very disruptive at times here as well, which of course is what that music means, listeners. Unfortunately, we've come to the end of an epic journey through the world of trading tech. We talked about Dash and why Peter bought it about 6 times now, here, over there, and then we got a whole deep, hopefully I answered a lot of your questions about smart routers. If not, if you still have questions, send them in. We'll drag Peter back all the way from New York, and I think he can do it remotely next time, and we can talk about all that fun stuff. But Peter, you were a good sport. You played along with us here throughout the entire show. So before we go, if our listeners are interested in learning more about all the things you were talking about, maybe some of your visualization software, or maybe contacting you guys in terms of using you to configure a smart router for them, where should they go? What should they do?
Just go to dashfinancial.com. That has everything about our products and our company, and that's all you need to know.
There you go. Easy enough. You can also follow them on Twitter. They're at Dash Financial if you want those intraday updates, how they're tweaking their algos as they speak. They'll put it out on Twitter for everyone to see. All right. And Matt, I know you guys are always working on cool new updates for your clients over there in the land of ORATs. I'm sure all this volatility back and forth in the space has been driving a lot of people your way with a lot of interesting data requests. What are you guys working on over there in the land of ORATs?
Yeah, of course, the back testing and now more implementation. It's one thing to come up with a cool back test, and we have a lot of bells and whistles, when to exit, when to adjust a trade, when to move a call out on a iron condor. And then it's one thing to back test that, but then implementing it is another. We have scanners, and then I'm proud to call Dash a solid integration partner. It really is quite amazing what they've done over there, and it makes my job a lot easier. We don't execute, but we send to execution providers, and Dash, as I think you've seen on the show, is quite impressive, Mark.
Yeah, a lot of interesting stuff. Check it all out there. Check out Dash Financial. Check out Matt's team over at ORATS. That's ORATS.com. They have a good blog there. Check it out there in between shows. And on behalf of Matt and Peter, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing, and of course sending in such great questions. We'll try to get to more next time when we don't have such a deep topic to discuss. And we'll see you next time for more Trading Tech Talk.
Thank you for listening to Trading Tech Talk. You can find more episodes of this program along with detailed show notes at theoptionsinsider.com/TTT. While you're there, be sure to post a comment for your chance to be featured on the next Inbox segment. Trading Tech Talk was brought to you by Trade Alert LLC, the market leader in order flow analysis from Wall Street to Main Street. Visit TradeAlert.com to see how our specialized tools can help you master your markets.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.